I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go AskSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the AskSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market struggled to hold on to gains early in the week after the previous 2 weeks sent the S&P 500 up nearly 400 points. Investors were looking forward to the FOMC on Wednesday, but headed for cover on Tuesday after strong ISM and JOLTS data, and that S&P 500 that had been up first on rumors that China was going to relax their lockdowns on COVID, but then that JOLTS data really affected the market, and the S&P 500 went from up about 46 points to down 25 fast on that data. Wednesday, the FOMC policy statement hooked the bulls. At first, they heard the word lag, in other words, meaning that the Fed might actually be waiting to see how their present increases have affected the economy. And they were already high on pivot hopium. And the S&P 500, when they heard that word lag, moved up fast, 50 points. But then reversed sharply as Powell in the presser said, it's premature to think about pausing, and that ultimate levels of interest rates will be higher than originally expected. Well, that clearly gave a sense that they were not near done, and disappointed bulls didn't stop selling. The market went from up 50 on the S&P 500 to down 100 at the end of the day, and it was pretty much steady selling. And the joke was really on JP Morgan, who came out and said, well, it's going to go up 10% on that news, or at least that would be the start of a 10% rally. Well, it certainly didn't look like that by the end of the day. And Thursday, investors just kept selling, but then found support at important levels. And I'll show you that coming up in the show. Still, it was another weekday on Thursday with the S&Ps down 40. Friday, the employment numbers were coming, and the indexes were up on hope for weaker numbers. The numbers did come out kind of mixed. Now, it was estimated that the payrolls would be up around 205,000. They were up 261,000, but that's still a weakening throughout the year, but stronger than what the estimates had been. Unemployment rate did move up from 3.5 to 3.7%. Overall, really, that's too strong to influence the Fed. Indexes, well, extremely choppy day. They were up pretty strong on that hope that it would be weaker numbers. They fell to below even and then rallied to up 60. And then in a very choppy day, moved down again. And now here at midday, as I'm recording this video, they are up around 50. That big reversal that we saw at the same time in the dollar comes as investors really do see this as a weakening in those numbers and are looking at it favorably as they digest all of this employment information. Still, there's going to be an increase in December by the Fed, 50 to 75 basis points. That is coming. It's extremely likely. We will get more information as we get the CPI next week. I learned long ago, it's not good for our business for me to be too political on this show and piss off half the viewers. Still, the election is coming, and I've had lots of questions sent to me about what it means for the markets. I blew that call badly back in 2016. I wanted to actually buy the market, assuming it would be down big if Donald Trump won. Well, he won, and it was down big overnight, and there was that big big decline, and then it came all the way back, and before the opening, it gapped to the upside and did not look back. There was a massive rally after that, and it did catch me by that action, and I don't get these election calls that correct, as you can see. I think this year is a little bit easier to call. Economy and inflation, they're the top issues right now. So, my opinion, for the best result for the market, we really need gridlock, because that would keep the spending at bay that has caused much of this inflation that's going on. And that's actually what seems likely based on what I see in the polls. And it does set up an up week or next week or a rally after the election. It's unlikely that that the result would be that the Republicans don't get either house. And if that's the case, and there is a low odds Democratic sweep, then I think look out below, again, because of that inflation fear. Also, despite the Fed hawkish talk, it won't be long before the bulls are looking over the valley again, talking about the Fed pause or pivot. So despite last week's bout of selling, our analysis still shows upside into the beginning of 2023. So this bear market bounce still has 4,000 on the S&P 500 as a reasonable target. I'll show you that as we get further on in the show. For this week, as we are here right now at midday, the major indexes, they have a wide variance actually right now, having declined around 1.5% to 6%, and the Dow absolutely the best, and the NASDAQ absolutely the worst, as there is a clear changing of the guard. And this might be around for a long period of time, as those techs, FANG stocks, are badly out of favor. And our work says they have more to go on the downside. Bond market slightly to the downside is the 30 years down about a point. They fell about 7 basis points. That lifted about 7 basis points to the yield in the 30 years. Now the 10 years, they gained 13 basis points. So we see more steepening, which is not good in this interest rate market. And certainly it would mean that the financials, which have had a very big upside move, well, they're going to need to get some news on this yield curve to support the rally. Gold market, well, up $25 after edging out a new low. I mean, that's a big gain after this fake out on the downside. And I think that was a fake out, and that a bottoming is in process in the gold market. Now, the other metals had already bottomed, and silver is absolutely soaring to the upside here. It's up over 6% on the day here on Friday, up like $1.35 on the week. And for those of you that watch our charts, there's actually a breakout of a diamond bottom that had been forming in there. This is bullish action in here. And again, that is related to the dollar. The dollar had a huge reversal this week after moving up very sharply on Thursday after that Fed news. Then it had really, what looks like it might be the biggest down day of 2022. And I think there's big downside risk in the dollar into mid-December, with our target of around 107. For the oil market, it's up 5% on the week, as there is fear about an Iran attack on Saudi and, of course, their oil fields. But at the same time, we see this dollar moving down sharply, and that also is supportive to commodities. So with the dollar having this big reversal, and it is really big reversal today, that I've talked about this before, and we're going to show you on FutureSpeak all of our analysis on these futures for every single Wednesday going forward, and you'll be able to follow and see if this statement is correct. But I believe inflation is embedded in the system. Now, there's not many people that will really say that right now because they believe that the Fed affecting demand, which is back asswards, if you ask me, is going to cure inflation. But I believe in this reflection of when the dollar is turning down right now, that there is a sense that the interest rates, as they get softer, that there will be less demand for the dollar. And what that means is that commodities will then soar. And you see that right now as just a sense of a declining dollar and a little bit of a downtick in interest rates today gives the commodities a lot of legs on the upside. And this is really a doom loop that we have going on right now because when the dollar falls, the commodities are going to rally. When the dollar falls, it's going to be about the prospect for interest rates having peaked and then moving down again. And that is all going to bring bids into the commodity markets. And then the Fed is going to see that there is just a small likelihood that that the interest rates, that the inflation rate that they look at is really going to come down. I call that the doom loop, and why inflation is actually embedded in the system right now. Coming up, I'm going to bring you my team, which is just an amazing team, and we're going to show you lots of stuff here. As Arby's going to share a preview on FutureSpeak, and he's going to bring you our analysis on the Aussie US dollar, which is entering a positive phase. Now, I just talked about the dollar peaking and having this big down day, and that's a perfect setup for the Aussie to do better. Of course, other commodity pairs also. Katie is going to review First Solar after just 1 week, and she's going to talk about when analysis goes wrong. And I'm going to present to you an amazing workshop special with just a great bonus. You can learn our charting style by investing in our cycle analysis workshop for an amazing reduced price. And you'll be able to improve your performance because we're adding a bonus, and that is my 5 essential building blocks to successful trading workshop. And you're going to learn just a ton about how you can improve your trading performance by hearing a lot about my history. And it's just an extremely valuable workshop, and you're going to get it as a bonus. And then I'm going to bring you my stock market review looking at the short-term S&P 500 and NASDAQ, and I'm going to show you our market monitor with proprietary indicators, and I'm going to bring this important dollar analysis that I believe is going to be supportive to the stock market in the short term here. So that's just unbelievably great stuff coming up. Be sure to go to AskSlim, subscribe to what we have offered, share this with people that you know, and make sure you follow us on everything that we post on. If you're new, sign up for any of the levels. We have some special deals going on. You can write to Arby on. This level 2 deal has now ended, but we have deals on all of our memberships for first timers. You can go to YouTube and subscribe to the channel, click the notification bell, and do like this video. Give it a thumbs up. On Twitter, follow us at AskSlim. And for any questions you have on everything I show, on all of our analysis, and also on our memberships, website information, write to Matt at AskSlim.com. This is a FutureSpeak preview. This is weekly. FutureSpeak is weekly and daily analysis on 24 different futures and indexes. So it's about 48 charts with all of our proprietary information on there. And that is done by Arby, who does a spectacular job. And that's available for level 2, 3, and 4 members. And we're going to show you this preview right now as he shows the positive analysis and illustrates our style of analysis on the Aussie US dollar pair as shown this week in FutureSpeak.
So there is a low due here. You can see this very nice wash out into this overall weekly cycle timing. The low is due 9.5 to 10.31. This is a much lower cycle low versus that old low. So we would just look for a rally into these zones from 65.34 to 67.70, and then look for this to overall fail on the intermediate term. Now, what I want to focus on is this daily chart. You'll see a fairly clear inverted head and shoulders, a left shoulder, the head, and now a possible right shoulder forming. So this is something that we have our eyes on right now. We have a neutral slim ribbon, and we need to see a higher low form. Ideally, this holds this zone from 63.46 to 63.03. We don't want to see it below the 78.6 at 62.45. And then look for this to turn back up to the upside and get into this zone from 65.40 to around 66.30. So that's the overall picture here in the Aussie dollar. US dollar, this is a larger basing period that is happening here, and we need to see this form its higher low and then turn back to the upside.
Super job on that, Harvey. This is Katie, and she's going to show you an example of what we do when analysis goes wrong. She's going to review First Solar, which we showed you just a week ago, and that bearish setup has gone wrong. Of course, when that happens, it happens because the data has changed and we revise our analysis. And Katie's going to illustrate that to you, and she does just a fantastic job on that.
Hi, this is Katie with AskSlim. On your screen is a 5-year weekly chart of First Solar. Now, last week we talked about a possible bearish opportunity setting up in First Solar, dependent upon what price action it exhibited post-earnings. That short-term bearish setup never materialized, as First Solar has really taken off to the upside after earnings, and with analysts upgrading the stock. Now, notice this dotted line that I have left on the chart showing our original projection. Obviously, we now have to raise those projections, and we are already at this intermediate minor 50% fib extension level. The next level to the upside is the 61.8 at 167.17. Now, we still do have a weekly cycle timing window coming out starting in mid-December and going through the end of January, when we would expect First Solar's current intermediate cycle to form a low. But with the strong up move this week, conditions have improved in First Solar across all time frames. Notice that from last week to this week, we had the reversal scout, which is our proprietary momentum indicator, turn green again. Now, in terms of cycle timing, we had this retracement after momentum had turned negative. So this move back to the upside is almost like a mid-cycle bounce. And I have placed minor half cycles in here, so you can see that this low lines up reasonably well with the minor cycle low that was due and now moving up into the rising phase of that second minor half cycle. Now, before I switch over to the daily chart, I want to point out one additional thing, and that is the disparity index. It is showing a measure of how far away the price is getting from the 34-week moving average. Well, when we get to an extreme on this study, we usually get some reversion. The only thing we don't know is exactly when that reversion will come. But I suggest taking note of this and using it as a caution flag. This blue line right here is the 34-week moving average, and you can see how far away from that moving average we are now. So over to the daily chart, which gives us some further information. As I mentioned last week, this prior cycle was negatively configured, and that means that it ended lower than where it began. When that happens, the probabilities favor not being able to make a new high in the next cycle, especially under negative momentum conditions on the intermediate time frame. However, Probabilities being what they are, sometimes the low probability event does occur, especially around earnings, and that is what ended up happening in First Solar. So, the market being dynamic, we have to be constantly alert and able to adapt to new information being provided. This is one of the strengths of our analytic method. It's very responsive to changes in market conditions. So, in terms of First Solar, we now have positive momentum across the board in all time frames. I showed you the reversal scout on the weekly chart. The reversal scout on the daily chart is also positive, and the slim ribbon, which is another proprietary momentum indicator that colors the candles green, gray, or red depending on momentum conditions, has also turned positive. We have also broken through some key levels to the upside. I'll talk more about that in a moment. Also, First Solar has been showing strength in the face of general market weakness. So this all lets us know that the short-term bearish hypothesis suggested by market conditions prior to the earnings announcement is no longer appropriate, even though in the intermediate term, we still do expect a period of risk around the end of the year, beginning of next year. So for the short term, however, conditions have turned more positive. Something I want to show you today is an important tenet that we talk to our members about all the time, which is not anticipating moves, but instead to use the lower time frame charts to give us entry signals when we have trade ideas off a directional hypothesis. In this case, we had a bearish hypothesis based upon market conditions at that time and dependent upon subsequent price action post earnings, which was after the market close on October 27th. So, looking at the 2-hour chart, for example, for an entry signal to the downside reveals no entry signal. From October 27th, which is here where I'm drawing this arrow, through the present time, both the slim ribbon and the reversal scout on the 2-hour chart have stayed green the entire time. So actually this morning, the slim ribbon PO even gave us a momentum continuation signal to the upside.
Great work, Katie. I mean, I'm telling you, when you can explain things the way you did there, I mean, it's just beautiful. My stock market analysis is coming, but first, see this amazing first-time offer on AskSlim Workshops. Announcing the pre-Black Friday AskSlim Workshop special. This includes our cycle analysis workshop and a bonus workshop, and we've never done this before, as it includes the 5 essential building blocks to successful trading. I'm going to show you all of this, and it's going to come to you at a huge 44% discount. Each of these workshops are just filled with information. For the cycle analysis workshop, you'll learn Slim's method of analysis, developed over 48 years. It took 2 years to write this and over 6 months to produce. There are 22 video modules, plus many tools for text videos that are linked in there that are associated with the analysis. Just an unbelievable amount of learning. This is online lifetime access. You don't need any special platform. You'll never look at charts the same way as before. To improve your directional decisions, project in time and price. And we're going to support you as coming in early 23. We're going to hold a live event for workshop members, and we'll be able to answer all of your questions as you develop this style of analysis. And Matt has a demo reel, and you can ask for that, which shows some clips of most of the videos in this workshop. I'm going to go to the workshop page and just show you what's in here. If you go to the main page in AskSlim and click on workshops here, you can see cycle analysis workshop and 5 essentials. I'll show you the information on both of those right now. So if you click on Cycle Analysis Workshop, it's going to take you in here to the informational page. Now you can see that the regular price on this is $12.97, but you're going to pay nothing like that. It's just a great opportunity to learn so much. And you'll have more success as a trader if you learn this style Well, we can't guarantee anything, but I believe that you will learn something that will be incredibly valuable to help build a sustainable career. But you'll get better at identifying trade entries and exits and stop taking those bigger losing trades than you do on your winning trades. You're going to end the confusion about technical analysis and really learn the true predictive level of charting. All of the information is right in here, and you can see there's a video here that you'll be able to play, and this will walk you through and explain the workshop to you. And you can also see on the bottom is what you get in each module here for this amazing workshop. This is just absolutely incredible, and you will be able to learn so much in here. And you will get email support from me if you take this for 30 days also, and just an unbelievable opportunity to learn this style of analysis in our cycle analysis workshop. But there is so much more to this, because we're also going to offer you, besides the cycle analysis workshop, the 5 essential building blocks to successful trading as a bonus. So this is going to cost you nothing additional. It's a 6-part workshop where I share lessons from my 48 years as a trader and over 2 decades as a coach and personal growth facilitator. It's not like any workshop you have ever experienced, and it's not a how-to on any particular method of trading. It's a comprehensive learning experience on the 5 most important aspects of successfully engaging in the financial markets. Get ready to look deep into your roadblocks to greater success. Let's go back to the AskSlim website right over here and back to workshops and to the 5 essential building blocks right there. And you'll be able to see information of what we're going to teach you when you take this. This is a 6-part workshop, and there will be an introduction there. And building block 1, defining a healthy role for trading in your life. Building block 2, building emotional fitness. Building block 3, balance and trading style, personality and risk tolerance, and so much more. Building block 4, to adopt 6 key areas of discipline in your trading. And building block 5, creating your own winning formula. Absolutely unbelievable. We are putting this as a bonus as you come and subscribe and invest actually in our amazing cycle analysis workshop, getting this special bonus, the 5 essential building blocks to successful trading. So this special, just incredible, 44% discount. This is $8.97. It was a value of $15.94 for both workshops. If you wanted to invest in something like this somewhere else, you would pay thousands, maybe 5,000 or more for the information you're going to get right in here. If you're a premium member at any level, you're going to save an extra $100, and that would only be $7.97. So if you're not a premium member, sign up. For our members, write to Matt at AskSlim.com for that special link for $797. Or if you're brand new and just signed up, then write to Matt also for that link, $797. You're going to save an unbelievable 50% by doing that. Write Matt at AskSlim.com, or go to the top of the AskSlim page and click that Learn More button, and you'll be able to get all of the information that I just showed you and so much more. Make sure you watch that video in the cycle analysis workshop. This is a mind-boggling offer. And again, you learn to do our style of analysis, and you will never look at charts the same way. That's it. Please do invest, and write Matt if you have any questions. This is the stock market short-term view. And you can get our daily snapshot by becoming a level 1 member. You're going to get full analysis on the S&P 500, NASDAQ, Russell, all of our cycle analysis, projections, AskSlim studies, and so much more about all of the momentum conditions in these indexes. You can get that just by becoming a level 1 member. Level 2 members, you're going to actually get our live chart streams for the S&P 500, NASDAQ, and Russell on the very short term. It's amazing on that SIR chart stream, and you'll get the S&P 500 live chart stream also with all of our analysis on there for level 2. So just fantastic. First-time member, write to Matt at AskSlim.com. I'm going to show you now this short-term analysis on the stock market. Let's start out first by looking at, well, pretty blank chart here of the S&P 500. And what I want you to see is there's some of our indicators on here that are extremely important to our analysis. And then I'm going to bring in the cycle analysis, which I think you will just, if you're a first-time viewer, you're going to find it, well, just amazingly interesting. So what we have on this chart is our 89-day simple moving average, which I use instead of a 50 or 200. The slim ribbon, which is this right in here, which is a 3 moving average ribbon, and that has coding in there that colors the bars. It also colors volume bars if there was volume on here, and it tells you when the configuration of the ribbon is such that there's a likelihood of continued momentum in a specific direction. In this case, you see that red. Here, the slim ribbon PO, it gives you indications of, first of all, it's red and it shows you negative conditions, and then these arrows in here show you momentum resumption conditions, when it is likely that it will move down again in that direction. You can see that right over here, right in this point right here, and it's about to give an upside signal right there. As it is a turning up, but it's not really in there yet. But we are anticipating that that will give you an up green arrow fairly soon. So what I want to do now is I want to change this. I want to bring in our analysis that is cycle analysis. And I'm going to switch over to our daily chart and bring in our cycle analysis. And all of a sudden, this just pops out with all of our artistic work on here. Cycle analysis is that. It's an art form where you look at the energies in the market. On the bottom are the cycle brackets here, which essentially show you the energetic movement were it to be ideal and completely consistent, like an oscilloscope where it actually moves up and down in a consistent way, or a heartbeat, like the heartbeat of the market. So what we do is get these energies, and we see resonance in the market as it continues to follow these patterns. Now on the top, these lines are how each cycle actually resolves itself, and the shape or configuration of those gives us important messaging. You can see right in here, and I'm just going to blow this up, there are areas where there are these yellow ovals, and that is where the energetics are such that you have a cycle that is in its final phase and in a correction phase, and usually joining up with some smaller cycle brings you the biggest downside, as you had here, here, and here, as you get to the end of those cycles. Note right over here where it didn't fall very far, and the messaging from that, as this configures very bullishly, is that there's a lot of buying. And you can see the slim ribbon positive, and that set up that next upside impulse that came in there. That was just great. You see in here it turned down, rallied, and failed from these resistances, and then set up that correction right over here. Now, this low right over here, slightly lower than this low, said that the next rally would likely fail. It did that, left this abandoned baby right in these sell zones, and then once it topped and broke this level right here, it set it up for a decline right through the bottom of the cycle, as you see right over here. So that is cycle analysis at its very basics. And of course, there are many nuances to it. And the cycle workshop that I have announced, that special great deal. And if you didn't see it, please go back and watch that, and you will see what we're offering. It really teaches you how to do this style of analysis. So here we are right now. And of course, coming up an important election week, and there is election day. And there are these little minor cycles that you see in there, 8, 9 days, like that. And there's another one of those due right out over here. Now, it's pretty likely that this minor cycle right in here is going to line up with the corrective phase right in here, and then give you this period of risk, this yellow oval, for another decline. However, we do believe that the intermediate or weekly patterns have turned positive, and that's why we've given more bullish intermediate projections. And this big engulfing pattern right over here is typical of what you get at a significant bottom. So what we're looking for is some pretty choppy action in here. Of course, here's election day, and I made comments in the beginning of the show about what I think about what would happen on the election, and basically the what I said was that gridlock will probably be a positive thing, and that is the highest probability. So we're guessing that this minor cycle will bring you some rally out over here, some correction out over here, and then further rally. And you can see that we're really looking at what we think is a pretty choppy period in here, where you could very well get a range between 3650 and 4000 on the S&P 500, coming way out into, well, this is mid-January. We may potentially way out into sometime, this is mid-December, potentially out into mid-January. So for the next week, we'd look for week and a half, some pretty choppy action in here as the election comes. It gives you another pop in here. Again, the highest probability, but always a tough call. And then some more choppy action out over here. Really looks like the area between this 50% and 61.8, that's around 3,700, and this is around 3,650, would really be the buy area in here. And then getting up close to that high over here sometime between, with some in the area of 3850, 39, would really be a sell area just for this little short-term pullback here. And again, a move out to 4,000 is pretty likely. There's a 78.6% right over here, which comes right at around 4,000, 39.90, which is why we're projecting right out to that level. Choppy action in here. I'd say the highest probability would be positive action after the election and then coming down into this period here. But overall, an uptrend that we see is developing in here, and it is an intermediate uptrend that should last quite a number of weeks. I would say 5 to 7 weeks. Now, were we to start to get under 3650 or 78.6% that's not in here, around 3570, that would be some warning. And of course, under this level of 3491 would be terrible, and that would set up very significant declines going out into the March time frame, where we think the ultimate bear market low is probably coming. So right now, that's a low probability, and the highest probability is this choppy upward trend in here we see out towards the 4,000 area, out into mid-December, and then into sometime in January again. Choppy action. So let's take a look at this is the S&P 500. Let's switch this over to the NASDAQ, because the NASDAQ is very different. And what I spoke about earlier in the show is the changing of the guard. And that is happening in here, and quite visible as you see that while the S&P 500 is well above this 78.6 level here, this has already touched it. And it's possible that the S&P 500 will not, or likely it won't break this low, but it is possible that you will see what happens is that the NASDAQ actually does try to get down and test that low. So I'm just grabbing this right over here and bringing it down to this low right over here. And if it gets underneath that level, as you see, that would be somewhere around that, 10,400 and change. Actually, it's 10,440. Then that would be setting up a very negative condition. Having gotten down to the 78.6%, it already suggests that this next rally will not make a higher high and then come down again. The question is, can it save itself in here and not get a breakdown and get underneath that 10,440 level that is so important in here? NASDAQ much weaker. I'll show you that as we look at our market monitor. So, I mean, if you wanted to trade the market to the long side, it sure doesn't make sense to pick the weakest index, and that would be the NASDAQ right now. Here is our market monitor, which shows our proprietary information in here, and I'm going to share that with you. It goes from this side, which is the reversal scout, which is the most sensitive to the market, to the slim ribbon, to the option bias indicator, to the AskSlim market condition indicator. This indicator has got the longest term variables built in there, and you can see in here that it runs from plus 100 to minus 100, and there's something called the swing zone when it's in the minus 25 to plus 25 area. Nothing has moved above that plus 25, so there's nothing positive in here yet, and that's why it's orange and red. But look at the NASDAQ, minus 92, compared to looking at the S&P 500 or the Russell or the Dow, which is plus 10. The NASDAQ is terrible. Actually, it's moved to neutral, where all of the other indexes have moved to green on the option bias indicator. That's what you use to decide whether or not you want to be long or short in your option positions, and it really helps you. This is the slim ribbon, which is right on this page right over here, and you can see still negative here on the QQQ as it is in the reversal scout. So there are much more positive conditions in here than we showed weeks ago when the market was in very bad shape, and this is just so helpful for you to be able to really understand the conditions of the market. You can see in here I also put in the FEZ, which is the top weights in Europe. That's really the Stocks 50, and you can see that it's pretty positive when you look right over there. So all of these looking good except for the NASDAQ for the short term. And intermediate term, well, still very questionable, as those are still red or orange, and they need a lot of work for the longer term to turn better. So short term, it does look a lot better. So that is the NASDAQ, a lot weaker. Now I want to switch over to important analysis on the dollar. I recently did a big picture analysis on the dollar and talked about that there's an important time frame here where it was likely to turn to the downside. Now, when we got the Fed news that came out that was telling us that they're pretty hawkish still, the dollar had a big rally. But here is that cycle analysis on the dollar, and I've contended it was making the top and likely to get a move down into the 107s and 106s. I'm going to show you that right in here. You can see again the cycle analysis. It is beautiful. Here are the cycles that are the cycle brackets, which are the ideal, and then how they resolve is actually up here. And you can see there's a minor half cycle and a dominant full cycle that makes up the harmonic family in here. And what this shows you is where these corrective periods are here and here, as both cycles are coming down, and here. Now what's important about this is that we are in a period where the dollar and stocks are moving inverse to each other. It's not historically accurate, but right now that's what we have, so that's what we're looking at. And the main reason for that is because the stronger dollar kills the internationals here and really hurts their earnings. It puts huge headwinds into it. And so the stock market responds. Now, look at this big reversal in here. Now, at its lows, it was one of the biggest or the biggest down day of the year. It's coming back a little bit right now. It's bounced off of that, but we are coming into the period of risk for the dollar. Now, you can also see what's formed in here is a head and shoulders top. This cycle right over here made the left shoulder and then the head right over here, and this minor cycle in here has made the right shoulder. And head and shoulders patterns are formed because of cycles, because the energy changes. And you can see in here that this minor cycle already turned down. That means this bigger dominant cycle is already declining. It got up here into this pretty high sell zone right over there, but then reversed beautifully. And that sets up this decline. Support here on this fib extension at around 107.37. This 61.8% extension is down around 106.35. Those are very reasonable downside targets. And if this comes as we expect, and that ends in early December, syncing with the weekly analysis, our target is 107.40, 106.35 right in here. This is going to help the stock market coming down because it will give relief to those international companies that are under such pressure. So that is likely what's going to happen, and it probably means that interest rates are going to be coming down or the bond market rallying during this same period. All of that will be supportive to stocks, and that's why I wanted to show you this right now, because I think ultimately it is incredibly important to this analysis on the stock market. So I showed you the short-term patterns are setting up for a rally to continue into December and probably into January, that our indicators have turned much more positive, looking at those proprietary indicators in the market monitor, which you can have if you become a level 4 member and open up a thinkorswim account. Then you'll be able to run the market monitor, and you will also see that, as I showed the analysis on the dollar, it's pretty likely the dollar is going to continue down and lend support to the market, the stock market. Even though that is not historically what happens, that is what's happening right now. A lot of people will write to me and tell me, well, that's not true about the dollar. Well, it's true right now, and we're looking at short-term analysis. I want you please to go back, if you haven't seen the special we're running on our cycle analysis workshop and the bonus of getting the 5 essential building blocks to successful trading. Go look at that right now. You can learn our style of analysis. You'll just be amazed at how well it supports your trading, and the great 5 essential building blocks to successful trading. That workshop will be so helpful also, and that is a free bonus if you subscribe to the cycle analysis workshop. Just a great offer that we have right now. Please go to AskSlim and subscribe, share it. If you're new, don't miss our specials that we're running right now, especially the workshop, and do subscribe to YouTube. Click the notification bell, when we post videos, and like this video, give it a thumbs up. Watch our member videos in the playlists for past shows, and on Twitter, follow us at AskSlim. Any questions on anything that I have brought you, please write matt@askslim.com. I want you to be so unbelievably careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been